Hello, everyone, and welcome to this special report about the market. We've been talking about predictions. We've been talking about where to invest your money. I gave some predictions at the end of last year, and in our last podcast, I made some bold predictions about where 2026 goes. But who cares what I say? Let's go see what the experts say, because Cathie Wood from Ark Investing just put out her big ideas report for 2026. And I'd like us to go sit together and validate, did we bring you the right information? Were we fair with you? Did we tell you the right stuff? Because some of you might actually follow us and invest based on what we're saying. So let's listen to what Cathie has to say. I bet you anything, you're going to find a lot of similarities with what we said at the end of last year. Remember, the reason we started having those conversations, a man with the name of Michael Burry, who predicted the last big crash, the one from the movie The Big Short, decided to short the market, and specifically Palantir and NVIDIA, thinking that there's an AI bubble. Is there really an AI bubble? What happens to the money that you have for your retirement, your 401k, your RSP, your investment portfolio? What happens with that? So let's look at this together. Let's listen. Let's take a listen together.
I'd like to start with a section we're calling the Great Acceleration. And what we're trying to communicate is that AI is in early stages still, and that it has miles to go. Sure, it feels like it's a hype cycle because capital spending in the tech and telecom sectors as a percent of GDP is nearly as high now as it was during the tech and telecom bubble. But if you will remember, the tech and telecom bubble laid fiber, and most of it remained dark. Today, the GPUs are driving this cycle. And I'll steal from Brad Gerstner at Altimeter. He's saying those aren't dark. They're in short supply, and they are being used. And we agree completely with that.
Did you guys just hear what she just said? She agrees with our diagnosis, our analysis that we said last year. There's a very big difference between the 2008 crash, the dot-com bubble, and what's happening right now. There is big need for data centers. There is big need for the GPUs. At any point in time, you could be we go through cyclical things, but every now and then, and she'll talk about that, there's a step change that comes when there's an industrial revolution. So pay very good attention, because what might happen is some people might panic, hear people speak, sell too quickly. What I'm telling you is, yes, it will be a volatile year. You will have ups and downs. You might worry about the typical SaaS from a value of software. But listen carefully to what she says, and we'll continue again.
We compare this capital spending cycle to the railroads in the 1800s. That got up to 5 to 6% of GDP. And then the automobile explosion in the early 1900s. That got up to 3 to 4% of GDP. And then we get to the tech and telecom bubble. That, when you added software and hardware, comm equipment together, that was about the same size as the auto capital spending cycle. And we're about there now in this cycle with AI, robotics, energy storage, multi-omic sequencing, blockchain technology. But we think we're going a lot higher. We think we will go up to, or capital spending as a percent of GDP will rise to 12%. And I'll get into some of the reasons why, but key is productivity, as usual, economics, productivity. We believe we're fairly early in this cycle. So let me, before I go on to some of the productivity gains that we see, also highlight that as a result of this investment boom and the increased productivity that we see, we believe that real GDP growth will accelerate towards the 7% plus range by 2030.
Did you just hear the GDP growth? So we're a bit far from her predictions. If you don't know who Cathie Wood is from Ark Investment, you should research her up. But she's one of the biggest tech mogul investors. Ark Investment is in Tesla, in some of the biggest names. The portfolio itself is huge. She has to keep her ears on the ground for where she thinks technology is going. I don't think they do lots of research. Everybody looks at her research. I think she's one of the sound voices that are out there in the market. And she talks about the 5 areas that are in growth at the same time. We'll talk later about even other things like drone deliveries, like driverless cars, the robotics sections, the combination of all these things added with AIs, and she didn't even mention quantum computing. So we had a guest that was with us that spoke about quantum computing and started telling you how it's going to affect healthcare more than any other industry. If you don't remember, you can go watch our podcast. And last but not least, she talks about supply chain and efficiencies to supply chain. And if you remember our last episode of 2025, or before our goodbye episode, was about supply chain. And we were talking about MoveNV and their new AI-powered supply chain assistant for raw material marketplace, which is coming to revolutionize and add efficiencies and value in that marketplace. So keep your eyes on those and listen to what else she has to say about this.
Ingredients are all there, and it is also a hallmark of technology revolutions that we see a step function change in GDP. The 400 years until 1900, for example, global GDP averaged 0.6%. And then in the late 1800s, early 1900s, of course, we had the railroads, we had telephone, electricity, the internal combustion engine, technology revolution. That 0.6% real GDP growth went to 3% for the last 125 years. And so that was a 5-fold step up in GDP growth. We're saying maybe a 2.5-fold step up, but I actually think that's conservative, given the 5 innovation platforms evolving at the same time: robotics, energy storage, artificial intelligence, multi-omic sequencing, and blockchain technology. And those innovation platforms are converging, and that's what's causing the great acceleration here. So I'll take you through a few of the stats and the aha moments we've had this year as we were doing our research. So Frank and Joseph.
So as you listen to all the statistics, and I urge you to go look at her video, we'll put the link in the bio. And big credit goes to her and her team. And I really love and I look and wait for her report every year to figure out where the tech industry is going. Listen to what she has to say later on about the other industries.
And that shopping, commerce will be, I think that it will be 25% of it will be powered by the AI space. So stay tuned to, or definitely take a good look at their blogs and their big ideas chart. David, in the Bitcoin realm, it's been controversial this year because we had the drawdown after the flash crash, 1010, in October. We think that a lot of the deleveraging associated with, really, that was a software glitch, I think at Binance, that deleveraging, automated deleveraging, caused $28 billion of carnage. We think we've worked through that now. And I think the main question on Bitcoiners' minds is, okay, are we finished with the traditional 4-year downdraft? Every 4 years, a downdraft in the cycle. We're beginning to think we are, although we could base here in the $80,000 to $90,000 range for a while. But we do believe the next inflection is up. And while I know we got a lot of publicity this year because we talked about stablecoins usurping one of the roles we expected Bitcoin to play. Now, we expected this 10 years ago before stablecoins happened on the scene. But in terms of remittances and emerging market activity, we're seeing stablecoins usurp that role that we thought Bitcoin would provide. That doesn't take away, though, from
blockchain is here to stay, but inside that, we're talking mostly about cryptocurrency, and things like Bitcoin have become part of the usual investment portfolio. If you're unfamiliar with it, talk to your financial advisor, figure out how you can have that part of your portfolio. We'll learn the comparison between that and the gold rush that's happening right now. She'll dive a bit deeper into it, so pay attention to the next few minutes. If you don't have knowledge about how that works, she will definitely, I learned from her, so I think we can all benefit from this.
Ultimately will happen to Bitcoin. Bitcoin's role as digital gold has miles to go. Interestingly, and you'll see this in my New Year letter, the correlation between Bitcoin and gold has been almost non-existent over Bitcoin's life, 0.14. Nonetheless, we do think it is not only a risk-on asset, thanks to the new technology, but it is also a risk-off asset. It's a hedge against inflation. Its growth rate is lower than gold's growth rate, and I'll bet gold miners are doing their darndest to get more of that stuff out of the ground now that they're being paid so much more. That can't happen with Bitcoin. We've done a lot with nuclear power this past year. Daniel and Sam Chorus, who've also done our reusable rocket work. It's excellent research. They have done our work on nuclear power as well. And it is shocking to see how regulation stunted the growth of nuclear in the mid-'70s. If regulation had not stopped the cost declines for developing nuclear plants from continuing, electricity costs today would be 40% lower than they are now. So we have high hopes that nuclear power as well is going to help us once again, as they scale, drive down the cost of electricity and be a counterforce to the demands that AI and data centers are placing on our grid right now. So take a look at that work.
Nuclear is coming.
And then,
I told you
of course,
that Microsoft already powered 4 nuclear power plants in the U.S. in order to be able to have enough power to sustain all the AI demand that's there. I think if nuclear, we can have the technology now to have it done even safe or safer than we had before, and regulations come, would be one of the areas of energy sources that's environmentally good and can actually power uh, the grid and all the power that we need right now.
So that is U.S. analysis. And we know that auto sales right now, they're at roughly 15 million per year. That gives you a sense of how much the auto market, in terms of vehicles produced, could shrink. And yet we could still cover with autonomous vehicles, which obviously have much higher utilization than personal vehicles. We drive our cars 4 to 5% of the day, whereas an autonomous vehicle could be 50, 60.
So let me explain that part. We're talking about robo-taxis coming into the marketplace with Waymo, with Tesla. I think the prediction is Tesla is going to be the leader of that, which means it's ride sharing without the actual individual inside, and the cars, because of the robo-taxi ability, will be much more utilized. Individuals might not all need to own individual vehicles, uh, but we could still get exactly what we want, leveraging a lot less. That's what she means, okay?
Percent of the day. So you get the sense of how much the vehicle market could shrink and still we'd be able to satisfy.
So I think the conclusion of what she's coming to is we'll be able to satisfy the needs and demands of riders in the marketplace. So people will not feel the drop in vehicle output that is going to have to happen. Let's go to
delivery costs dramatically. Did you know there are already 4 million deliveries per year by drones? Now, to be sure, Zipline, one of the companies in our venture fund, is responsible for, I think, half of those.
So this is more efficiencies coming in supply chain and logistics. Okay.
We believe that the cost to deliver by drone will cut delivery costs. Right now, DoorDash, $15 per to less than $1. So a 90% reduction over time. So this is another huge market percolating out there. And we're so excited because we believe we're now in the prime time for the reason I founded Ark. I founded Ark in 2014 for this reason. I felt that Ark's research would fulfill an unmet need. And I'm very proud of the research we're doing. It's the kind of research
Thank you for doing
that investment banks used to do when the M&A market.
Okay. And let's go look at her conclusion because I really love what she has to say here.
That the wall of worry that we have been facing in the last few years around innovation is great. I think it's great because, of course, there are risks associated with innovation. But we think that the flywheel now is in place so that this innovation age is unstoppable. And we'd welcome you to read our Big Ideas 2026.
In summary, I thought her report was really amazing. They dive deep. The fear of AI taking away jobs. I think there's going to be a displacement of jobs. She refers to the exact same thing. So we're completely aligned and in line. I don't think we're going to have a crash in 2026. I think we will have volatility, and I repeat that again. So if you're a more frequent investor, you can take advantage of the volatility. If you're a buy and hold person, I think you're going to see NVIDIA, at least for this year, We constantly got to monitor. There's always geopolitical situations happening that might make us reassess things. But as we look at how 2025 ended and what's happening with 2026, with AI data centers happening out of the UAE, out of Saudi, I think you're going to start seeing people talk more about space. Elon Musk is already talking about creating data centers in space. So there's going to be a shift of jobs. One of the things she highlights in the report is a lot less entry level jobs, a lot of automation, whether it's at the code level, companies like Anthropic coming in and helping, going to codeless code is helping innovation. On the flip side, her recommendation to a lot of the younger people or people that are starting in the market, it has made entrepreneurship far more accessible. And therefore, anyone who would have a big idea could start leveraging a lot of the tools you can have, like I was saying last time, whether it's ChatGPT, Claude, help you put together your business proposal. They can help you create an app. You can have things like Lovable, Claude code that will help you create things. So I hope with this gives you confidence in the market that was happening. This justifies a lot of the analysis that I gave at the end of last year and the bold statements I made in the first podcast that we did in 2020. Thank you very much for listening to this special report. If there's anything else that you'd like us to deep dive in, please feel free to put it back for us in the comments. And I promise you I'm going to answer every single one of them. Thank you guys and have a wonderful, wonderful year ahead. Have fun investing.